Good afternoon, and thank you for joining us on the discussion about financing biodiversity, risks, opportunities, and challenges. My name's Nina Seega. I'm a research director responsible for sustainable finance at the Cambridge Institute for Sustainability Leadership. Within the Institute, we have a Center for Sustainable Finance, which runs three leadership groups: the Banking Environment Initiative, Investment Leaders Group, and ClimateWise, as well as a variety of other research and education engagement. We do a lot of work on integrating and embedding sustainability into financial and business practices. And within the Center for Sustainable Finance work, we've actually just published a handbook on how to integrate nature-related risks into the mainstream financial risk framework. I've got an absolutely fantastic panel here with me. Let me start by introducing them before we have hopefully an overarching and interesting conversation around all things biodiversity. Let me start with introducing Eric Usher, who is the head of the United Nations Environment Programme Finance Initiative. Eric's focus while at UNEP-FI has been to accelerate the deep integration of sustainability risks in financial practices. He also sits on a variety of industry bodies, including as a UN representative on the board of PRI. We're also joined by Marine de Bazelaire, who is a group advisor to HSBC on natural capital. Marine's joined HSBC in 2004 as head of sustainability for France and then Europe, and she's also an executive committee member for HSBC Continental Europe. As Eric, she holds a variety of advisory positions, as well as being an executive committee member of the Opera Comique Foundation. And last, but absolutely definitely not least, we've got Willem Evers, who is the head of the Sustainable Finance Office at the DNB, the Dutch Central Bank. And his job is to coordinate all work in the area of sustainable finance at the central bank and supervisor, as well as represent DNB on sustainable finance related issues. So welcome everybody to the panel. Let's jump right in. And I will start with asking Eric about the impact of financial services on biodiversity. So how can banks, investors, insurers, and other businesses in the financial sector understand their impact on biodiversity?
Thanks very much, Nina, and a pleasure to be with you for today's discussion. I think, we can start to break down the notion of biodiversity, nature-related risks across financial portfolios. And in some ways, they're similar in terms of taxonomy to climate-related losses. And of course, the two interact with various feedback loops. And the financial risks here are, I think you can describe it as related to four specific areas of risk. The first being the physical impacts of biodiversity loss. The second being the systemic impacts of biodiversity loss. The third being the litigation and around biodiversity loss and breach of underlying legal frameworks. And fourth, the notion of the transition to an economy which addresses these risks and losses and what implication that has on existing business models. There's a report called Nature is Too Big to Fail from PwC and WWF Switzerland, which goes into these, I think, in nice detail. This is also certainly being considered by the Task Force for Nature-Related Financial Disclosures, the TNFD, which is in the process of being formed. They're already looking at issues, and they've adopted in preparatory phase the broader framing of nature-related risks around the notion of double materiality. So here, organizations encouraged to measure, manage, and disclose not only nature-related material financial risks, but also how the organization impacts on nature, as well as its dependency on nature. Now, this broader framing, it captures this wider lens on risk, longer time horizon. So impacts and dependencies that are not financially material today are likely to become so in the future as policies change, as citizens' views change, and how the deterioration of ecosystem services really starts to impact on the financial bottom line. Of course, there's also the regulatory angle. And with climate risk, we see that materiality is being created in large part through bringing the TCFD into legal and regulatory regimes. And similarly with biodiversity, the French Parliament has recently amended their Article 173 to require the disclosure of biodiversity impacts. The EU taxonomy is also starting to look at environmental risk in the area of biodiversity loss. The Network for Greening the Financial System, this large network of central bank authorities, is also committing additional resources to biodiversity-related risks. And some central banks, including particularly the Dutch, and I think we're going to hear from Willem about that today, are starting to measure the impact of biodiversity loss on financial stability. So in terms of how financial institutions can get started, the approach is through the model Encore, which is a tool that helps financial institutions assess their exposure to nature-related risks. It explores the dependencies on natural capital of specific economic activities, such as power generation or different forms of agriculture, and the effects of changes in the condition of natural assets on business viability. Potential disruptions in the provision of ecosystem services, for instance, the dying off of pollinators, are linked to business production processes by what we call an ecosystem service materiality assessment. The Natural Capital Protocol is another example of a framework for conducting natural capital assessments. And we do expect the TNFD to start to work towards creating an industry norm to be widely taken up across various standards. I think as well as the risk management biodiversity businesses, the opportunities for action are certainly also huge. And for instance, the World Economic Forum has estimated that nature positive transitions could up to $10 trillion US by decade and create upwards of 400 million jobs. Final point, I think, though, around the opportunistic side is it's not just about seeking out these specific opportunities. Everyone can do a bit of this, a bit of that, included in our sustainability reports, and then continue with business as usual. And so I think, like with climate action, for the finance sector to really play its role in stabilizing, reversing nature loss, it has to go beyond just seeking out opportunities, and it really needs to start looking at how can they align entire portfolios with the nature objective.
Thank you, Erica. Can I actually draw you up on that last point around alignment? So within the climate sphere, we now have a relatively easy anchor to align ourselves. It's the 1.5 degree warming. What can be used within the biodiversity space to achieve the same objective?
Yeah, no, it's a key question. I mean, I think, for financial institutions, who need to start thinking about this really holistically, how do we align financial flows with the conservation, restoration, and sustainable use of biodiversity? It's a tough question. We do hope that this sort of nature alignment will be clearly called for in the next version of the CBD, the Convention for Biological Diversity, and specifically their post-2020 Global Biodiversity Framework, which is expected to be released later this year. I think the next step, once you have a broad framework, is to start to set relevant targets, especially interim targets. For example, by establishing relevant policies at a minimum to do no harm, or even considering exclusions, for example, from lending to activities that contribute to deforestation, such as, for example, Rabobank is a leader in that area. Banks can also adopt lending requirements through, for instance, their due diligence criteria, which align with sector-level policies and strengthen the customer-client engagement procedures. Certainly, a concrete step is to start encouraging one's clients and customers to set their own science-based targets for nature. We're going to release, through the Principles for Responsible Banking, we'll be releasing guidance for banks on setting biodiversity targets. This is being developed with the Science-Based Targets Network. And for banking, the PRB itself is a good structure to begin this discussion. There's also the Finance for Biodiversity Pledge, which we support. And these sorts of collective initiatives, I think they create the space for banks to jointly push beyond creating current practice and to start to define what we would call soft norm creation or standards for sustainability leadership. Many of the signatories for the Principles for Responsible Banking, which today represent over 40% of global banking assets, they've already committed, many of them, to net zero by 2050, and I think this is what you referred to, which is a slightly easier concept to get your head around. But we also know that at least a third of climate solutions will need to come from nature. And so similarly, having some sort of joint collective commitment on nature, supporting delivery of both biodiversity and climate goals and in some sort of joined up approach, which with relevant themes around, for instance, nature-based solutions, the sustainable blue economy, food systems, and more would certainly welcome. And it's that talks to the type of holistic approach that we believe the shift towards alignment involves.
Thanks, Eric. And if I actually bring Willem here also on the alignment point and on the various processes that are currently ongoing around the world that are driving us towards that alignment.
Yes, thanks, Nina, and thanks, Eric, for your interesting introductory remarks. So I think we as a central bank and a supervisor are relatively late to this party, but we've just beginning our journey to understand the impacts of biodiversity loss on the financial institutions, and therefore our core tasks maintaining financial stability and maintaining institution stability as a supervisor. So I think one of the key risks, because that's the perspective that we tend to take as supervisors, one of the key risks is a transition risk. Eric already mentioned there's a number of initiatives now going on governmental level, but also on private level, actually, to assess the longer-term alignment with developments in biodiversity loss and the impact of financial institutions and how these two interrelate. We've seen a similar development in the climate sphere, where we set a clear goal internationally to aim for a 1.5 degrees warming globally. And I think we need to have a similar roadmap to restore biodiversity and have all societal actors contribute to this restoration. And when we see private initiatives, such as in the Netherlands, a consortium of banks and supervisors coming up with metrics and measures to assess the biodiversity footprint that their loan origination, loan impacts have on these issues, it's encouraging on the one hand to see that there's a lot of initiatives, but it's also very clear that the metrics to be used are very difficult to understand, and we need a lot of more work in terms of clear mid-term stepping stones to a globally agreed framework and goal. Now, if we do not understand these transition risks at a certain point, then there's this clear risk that financial institutions will continue to have activities, lendings, investments that will have a risk once society has a tipping point and transition is taking part. And that is just one angle. We also see as a supervisor the physical risk, so the actual impacts on financial institutions' operations and loan books of a declining biodiversity. For example, 8% of all the global food crops is directly affected by animal pollination. So if you're exposed to these sorts of ecosystem services as a company, but also as a financier of such a company, then there's a direct physical risk if such service is declined or even is abolished all the way. And similar to the overall dependency on ecosystem services. We issued a report last year. It said it's named Indebted to Nature, in which we assessed that of the total exposures of financial institutions to ecosystem services, 36%, which equals 510 billion euros in exposures, is highly dependent or very dependent on ecosystem services. So you could imagine how much effect a physical decline of biodiversity can have on the risk profile of a financial institution. And a third angle would be reputational risk. So we identified that there's biodiversity controversies. A lot of banks in the Netherlands, for example, are lending to companies which emit nitrogen. So these emittents, it disturbs the natural nitrogen cycle in which nature is protected and biodiversity loss is affected. And there's a clear societal tendency now to really look at financial institutions for their role in this scandal, as it was perceived in Dutch society. So there's a growing societal awareness of the effects on their livelihood of a decline in biodiversity loss. So we think, and we urge financial institutions to pay attention to these effects, both three types of risks in their activities. And especially on the alignment and the transition risk, we foresee that there's clear governmental roadmaps to be established in the upcoming years, and we urge them to take those into account as well.
Thank you, Willem. And I would actually argue you're not really a latecomer in terms of a supervisory authority. I think you are one of the first supervisory authorities to bring out a calculation of what kind of exposure the financial sector might have to biodiversity. And actually, let me ask you to provide an example, because I think when we talk about biodiversity, the physical aspect of it is relatively clear. We talk about pollination quite a lot. But in your report, you gave a really interesting example of transition source of risk. And I think it was around the nitrogen cycle. So if you can give it to us in a couple of words, so it makes it the transition link also really clear and brings the similarity between climate and biodiversity even closer.
Yeah, sure. So we have, I think you mean indeed the nitrogen cycle roadmap that our government has set to abide to EU framework. And there was a ruling by our highest court in the Netherlands in which they said that the existing roadmap did not meet the EU targets, and therefore all activities in terms of agriculture, but also construction and food production, had to be halted all of a sudden because of the emittance of too much nitrogen and the disturbance of the natural nitrogen cycle. So there was a clear, sudden example, so to say, of a transition risk in which the economy and therefore also the financial institutions were directly affected by a transition that could have been foreseen, but the interaction between government policies, the EU level, at the local level, and also at the institution level was affected by this ruling, and therefore this is I think a clear example of things that we could expect to happen even more in the future when there's legislation at EU or local level with clear targets on limits to emittances of nitrogen or other elements that could affect the biodiversity in nature.
Thank you so much, Willem. And let me now bring in Maureen. Maureen, if I come to you right now and ask for your perspective on how do banks see nature-related risks in their financial risk framework, especially as HSBC is part of our steering group for our handbook. So it's a relatively natural question to bring Maureen in on.
Thank you very much, Nina, and thank you for looping me in this very interesting conference. Yes, I mean, certainly a lot has been said already by Eric and Will, and biodiversity is our sector's next frontier. We have decided to work on a comprehensive approach to natural capital risks and opportunities, including carbon markets, actually, and actually creating a dedicated role I am honored to try to fulfill. So how do we approach biodiversity and natural capital loss, I would say maybe how do we assess this? How do we address those? And is it effective? So how do we assess this? Will said a lot about the materiality of the risk. Taking a few figures, I mean, the EU estimates the losses in ecosystem services to range from around 4 to 18 trillion per year between 97 and 2011. Getting back to pollination, I mean, we see a rise in artificial pollination, which actually costs a lot. I mean, 320 million per year for the US farmers. I mean, we know that China is using also artificial pollination for a very long time, and it's a service that is starting to spread, unfortunately, in a lot of geographies. And not to mention the increase of transmission of zoonotic disease. I mean, we are in the middle of it. I mean, it's the right time to talk about all those issues. So yes, the materiality of the risk is unquestionable for the financial industry. And how do we address those risks? Well, it's not new in a way. I mean, we have had sector policies to address the way we finance different sectors within the financial industry for a very long time, within HSBC since 2004, and it started with a dedicated one to forests and products derived from forestry, and since they have been regularly refined, complemented with more specific approach to avoid contribution to deforestation and protected sites, with dedicated policies for agriculture commodities like palm oil, soil, and another policy dedicated to Ramsar zones. We also start to integrate, or I would rather say to assess how to integrate biodiversity loss into our transition risk framework. And certainly the work that we have been part of, that you led, Nina, from the Cambridge Institute of Sustainable Leadership on nature-related risks, certainly helps us a lot. How do we integrate those laws into our transition risk framework? And that has been covered by Eric and Will. How do we recognize the different types of risks? Being said that, I mean, is it effective? Well, up to the limit of it. Do we really understand what is the chain of consequences? Meaning, do we tackle the risks along the value chain? Are we able to translate those issues into a risk framework? Well, we have to be very humble at that stage. I mean, you may know that the Equator Principles has now included since July 2020 new commitments on biodiversity and data sharing. And for the moment, it's quite aspirational, I would say. Not completely, but I mean, it brings us to commit to support conservation, including with the aim of improving the evidence base for research and decisions related to biodiversity. So meaning that we don't have all the right knowledge to really assess well those risks. And certainly the work from the Task Force on Nature-Related Financial Disclosure, the TNFD, will be key going forward. It's going to be launched mid-2021, but it will help us to understand and probably assess those risks. So I would say we're not starting from nothing. A lot is already done. We understand the materiality of the risks, and we still need to work together to have a common, reliable framework to assess that important risk.
Thanks, Marine. And if I just follow on and take us into the biodiversity financing space, can you also say a couple of words on the opportunity side as well?
Yes, I mean, definitely. There's always two sides of a coin, and TNFD will also certainly support that. I would say that you may know that HSBC has announced its strengthened ambition to be a leading bank for the transition to net zero, becoming a net zero bank and supporting our customers in their decarbonization pathways, and through unlocking through new climate solutions. It completely embeds biodiversity issue. And a few examples, I mean, unlocking new climate solutions include natural capital investing and financing. On the investing side, HSBC Asset Management has announced a joint venture with Pollination. Well, the aim is to create different real asset, nature-based solution and carbon offset fund. I mean, a new strong natural capital asset class. And the ambition is actually really strong. And important to say that nature is the first carbon sink, and we need to support it to play this role in the future. That's also the reason why HSBC, with Lombardier, with Mirova, launched under the Sustainable Market Initiative of the Prince of Wales, the Natural Capital Investment Alliance. As for other examples, I mean, we can also support on the investing side of our customers. Actually, I think a lot, the financial industry has a lot to do to support its customers' commitment to net zero and to biodiversity loss stop, I would say. And to that, it means encourage them to assess their dependency to natural capital by encouraging them to set KPIs to suppliers, meaning opportunities for us to embed those issues into our sustainable supply chain framework, but also into our sustainable linked loans framework, into our green bond and sustainable bond framework, etc. And ICMA can play a leading role here. It's also I think to decarbonize their business, as it comes most often linked, as I said, with natural capital, given the increasing understanding to support high quality offsets. And the TSCBM, the Task Force on Scaling the Voluntary Carbon Market, can be really key to support the development of this financing of natural capital going forward. And we also have clients that have natural capital assets that were undervalued and for which the growing understanding of biodiversity loss issues and carbon market can be drivers for enhancement. With biodiversity data, we can build a lot of financial products that will support biodiversity restoration and preservation. And I would say that maybe to start with, we need us to assess our own dependency to natural capital, meaning through our loan book and through our financial activities.
Thank you, Marine. And that actually brings us to some of the really interesting questions that we've been getting. So if I open the question to the panel, one of them that came in that asks, what do we need to stop doing to achieve the speed and scale of transition that the biodiversity science dictates? And obviously that's not on the kind of on the nature side, right? We know that we need to continue protecting nature and stop causing trouble. But on the financial side, what do we need to stop doing in our mainstream financial business? Eric?
I mean, I think the starting point, and this applies and learns from it as well, the biggest change is we need to stop thinking what happened in the past will happen in the future, and we really need to get much better at predicting how changes are going to affect on industries, on communities, and adapt to that, and therefore or stresses just because a community or a business has had sound access to water resources for over history does not mean that there will not be water stresses or other types of natural loss to affect business viability. Therefore, we really need to stop believing business as usual will continue into the future and actually understand that the world is changing around us. And I think the message of that is getting out. There are very few industries today who don't believe that they can sit back and continue to do business as usual. Everybody understands that change is afoot. Of course, climate is probably the more visible, at least in terms of the messaging we hear, but the reality we understand underlying climate is a lot of that is actually nature risk, nature loss. And we can't stick our head in the sand. We actually need to be visible and start really seriously looking forward and getting better predictive models to understand where the risks are, where the opportunities are, and where we really need to align for the future.
And so in real practical terms, is what you're talking about things like changing the natural catastrophe models or updating the assumptions of the Nat Cat models in the insurance industry to reflect how quickly the situation is changing, or other practical examples that the rest of the panel can maybe talk about?
I think Maureen spoke to this a little bit. One of the biggest drivers for banks, at least, are what they're hearing from their clients and customers. And I think the risk agenda certainly drives decision making, but the opportunity side in terms of understanding what your clients need. And when you talk to your clients in different industries, and those industries realizing that they're in transformation, in disruption, and the bank understanding, well, what role do we have to help them navigate through these uncertain times, is that type of client forward-looking engagement that I think really is what's new, and it's certainly what's needed.
Yep, Maureen?
Yes, and I would say, to add on that, it won't completely directly respond to your question, but I think what we need is strong training of our staff within the financial industry and of our clients, because for now, let's face it, a lot still see biodiversity loss or natural capital loss as being linked to deforestation, linked to agriculture, not understanding that it's actually embedded in all sectors of the economy, that the entire economy is dependent on the natural capital, and we have to have much deeper understanding of where the responsibility lies to accompany our clients to a better footprint and activities regarding that. So training is certainly key, understanding and training.
Thank you. And if I just follow up on that, I think we've also seen in the last year in particular, quite a lot of activity in this space. And we've seen, obviously not enough of companies committing to certain targets or introducing new biodiversity policies. So there's a lot of talk. How do we move that talk into action and implementation? So we have a question here that says, what's stopping some companies from implementing biodiversity initiatives in their core business? Maureen?
Yes, I would say that we perfectly foresee that voluntary action is not driving the change that we need of halting biodiversity loss. And we need broader government and regulatory policies to correct the financial failures. It is absolutely key to accelerate the preservation and conservation of natural capital. Yeah.
And given that we've gotten to the policies, Willem, obviously.
Yeah. I have to jump in here. Thank you, Maureen. And I completely agree with you. I think we should encourage absolutely, as long as there's no agreed governmental level framework, we should definitely encourage private initiatives and voluntary contributions to this important topic. But I think what really is lacking at this moment is a clear roadmap to a set goal on how to prevent further biodiversity loss, and clear metrics, a common taxonomy, things that we have seen in the climate sphere, which I think indeed there's much interaction and one impacts the other and vice versa. But a similar line of thinking is needed to also address this issue of biodiversity loss. And I think we, as a supervisory community, but of course we are also the regulator and the at government level, we are the ones to set clear goals, but also to define what metrics should be used by financial institutions to address these issues, so that we start to talk in the same language, people start to share and use the same set of data, because there's also a risk, but we've seen now in the climate sphere as well, a risk of greenwashing, where we have a wealth of rating agencies, ratings, assessments on impacts, but never are these comparable, or there's a huge risk that companies will be able to say we have a positive contribution, but there's no real assessment of the exact contribution. And the only party, I would say, to come up with such taxonomy and such roadmap is the public authorities. So we do our part, and we also call on governments locally, but also internationally, to play their role as well.
William, and we've seen a lot of emphasis this year on the COP26. Do you hope that the COP15 in Kunming will be the place where this framework has a chance to settle in, to provide that guiding star?
Yeah, we certainly do hope so, and we're also ambitious to contribute to that. There's a finance track being set up for the Kunming, similar to the climate finance track that we see at the COP. That would be great. I'm not very confident that we'll have the same level of clarity that we have on the climate sphere as to biodiversity loss, but we do hope, and we will definitely contribute to having a conference that sets a clear global roadmap, which we could then use to start come up with metrics and data, etc., to have the financial industry and the supervisory community to contribute to that as well.
Thank you. And I guess we're almost out of time, but I have one more question that's been submitted, and it's actually quite an interesting one. It regards the relationship between climate and nature. And very much right now, we're talking about climate as the primary objective within many financial institutions, the objective where you've got the budgets flowing. How do we learn from that, and how do we direct an equivalent amount of attention, an equivalent amount of budget into the biodiversity conversation? So what lessons, maybe very quick answers from each of you, what lessons do we learn from the climate journey, and how do we apply them now onto the journey to financing biodiversity? If I start with Eric.
Thanks. And I think Marine already started to mention the need for training, and basically, we need to start thinking about the deep integration of these issues across financial practice. And that there's no longer enough to just have a crack team who deals with these issues and everybody else in the bank or the financial organization can kind of refer to them. Everybody needs to be informed, needs to understand what role they need to play. And increasingly, we need to be looking at these as, once again, in a holistic terms. So it's not so much about issuing great new transactions and promoting them. It's really about holistically saying. So if we talk about the simplistic green bonds universe, it's not so much about issuing the next green bond. It's about the greenness of the entire bond portfolio. And I think how we get our heads into understanding that from a nature perspective, what does it mean in terms of governance changes? How is the bank changing to deeply integrate these issues across the practice from the top to the bottom and from the bottom to the top? That will be the indicator. That's what we've learned from climate, but we're only just getting started, and we need to learn from each other in getting there together.
Thanks, Eric. A couple of words, William, from you.
Yes, I completely agree with Eric. I would add to that maybe second by the previously introduced topics of having the taxonomy and metrics. I think that is the key to that. What we learned from the climate journey is to have a clear taxonomy on what is green, what is brown. Actually, there is no taxonomy on brown yet, but there will be hopefully in the near future, so that institutions, economic agents, individuals can have a clear goal and can have a clear assessment on how they can contribute to economic activities that actually do contribute to tackling climate change. And a similar journey, similar taxonomy, similar metrics we need with the biodiversity issues as well.
Thanks, Willem. 2 words literally from Marine.
Yes, I think we don't need to spend as much on biodiversity as we did on climate, because a lot has been done and will help on biodiversity, a lot of what has been done on climate. But we need to be careful not to fall into the trap of thinking that we're going to have one metric, as we do with CO2 equivalent for biodiversity. So we need to follow the path and lesson learned from climate and adapt cleverly to biodiversity issues.
Thank you very much. And the only thing that's left is for me to thank everybody, thank Eric, William, and Marine for their wonderful contributions, and thank the audience for their fantastic questions. Thank you.